Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about why I just bought more shares of Tesla. So for those of you that don't know what's kind of going on with the general market, we've seen so much volatility due to the Russia and Ukraine situation. This is causing a lot of emotion in the market and a lot of emotion, in the news, in the media, everything like that online. And with that, you get sell-off, right? But anytime there is a reaction in the market, most often it's going to be a overreaction. And that's kind of what we've seen is where this S&P 500 has fallen, upwards of 2.5% per day for a while. As you can see, it was trading for about, $4,820, sold all the way off to as low as about $4,100, right? That is a decent sell-off, especially for an index like the S&P 500. Now, a lot of people like to always think that the trend is going to continue, and it easily could, right? That whole situation right now going on overseas could easily continue. And you have to understand that, but as long as you guys have a long-term outlook for that general market in the S&P 500, you'll be fine, right? What I always like to say is for all the people that bought in, 2000, and if you would have bought in 2007 right before that crash, and if you would have bought in, 2019 right before the 2020 crash, if you would have bought in any time in the S&P 500 history, you would be up on your money. And as long as you have that long-term outlook, that's the main idea. So anytime it sells off, you always have to look at it as an opportunity to pick up a couple of shares, for sure, dollar cost average it, and you'll be good. But getting back to Tesla, this is one of the reasons why we've seen a lot of sell-off, is because of the general market. Right, the general market has been very, very volatile. And with that, we've seen volatility from Tesla. We've seen volatility from virtually almost every single, major company, Apple, even a company like Facebook, also known as Meta. This thing has been getting hammered for different reasons, but definitely doesn't help. Some things that have actually gone good is anytime you have some sort of conflict going on overseas, oil has a tendency to go up, right? And right now, oil, as you can see, ever since that whole situation overseas has just gone parabolic, and you could have bought an oil. You would have actually been paid to get oil a couple of years ago, which is crazy. Another company that's been doing very well, Lockheed Martin. Goes without saying, definitely a war company, and this thing has popped up. Kind of expected. Another stock here is Raytheon Technologies. This is a missile company, as you can see. Very solid numbers, good growth. But honestly, at the end of the day, you always have to use volatility to your advantage. And given that right now, if we look at Tesla, you can see just basic technical analysis, right? You can see, okay, we have some resistance right here. This is about the $1,100 mark. As you can see, it hits it and always just has a hard time breaking above it and staying above it. Okay. Not to mention, guys, if we zoom out, you will notice this purple line. Okay. This purple line represents the 200 moving average line. This is a very, very strong support for Tesla in general. So as you can see, almost every time it hits it or gets around it, we have that tendency to see buying pressure. So it hits it. Okay, given it hit it here, got bought up, hit it here and continued to sell off, and immediately got pulled up here all the way up to $800. For me, I think Tesla carries so much long-term potential. This isn't a stock that I'm going to swing trade, day trade, anything like that. This is a company that I strongly believe in the next 2 to 5 years could easily be double or triple the amount of it, the amount of $800. I definitely believe Tesla is not going anywhere. $800 for me just looks as an opportunity to pick up a couple of shares. For me, I'm a huge dollar cost averager. So, I don't try to time the market. I find that very, very challenging, as well as everyone else. But I definitely think that dollar cost averaging is the best way to make money in general with the market. The reason why is because looking at Tesla has that beautiful upward trend. Any stock investor that tries to tell you, Tesla, or you shouldn't invest in Tesla, well, if they show you that, show them this, right? We have this, okay? This beautiful upward trend, okay? Great numbers, great fundamentals in a top growing sector. And with that upward trend, I definitely think that it's going to continue. Even if we've seen volatility, dollar cost averaging is a great way to invest, because if we get sell-off like we've seen in here, you're continuing your investment. So once the stock recovers, you make money. Okay, you continue to buy shares. If it goes up, that's great because you have shares. And sells off, guess what? You're continuing your investment. So it moves your average cost down, boom. Continues your investment, boom, boom. So now your average cost is very low. Stock goes up, you're continuing your investment, and the beauty of it is when it sells off, that's where it brings so much opportunity. You know, there's a saying that when blood is running in the streets, that's the time to buy, right? And I definitely think that time could be coming. But you have to go with every approach with the long-term mindset, guys, and you'll be all right. I definitely think for me, Tesla just brings opportunity. And at the end of the day, there's so much volatility. You have to be smart with your money, right? Cash is king. Find good quality stocks to pick up on. And hopefully this situation overseas dies down in the next, couple of months. And then we'll go from there, guys. So I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, guys. Stay positive, and stay safe. Take care.